Good morning. It is Thursday, May 18th, 2023. It's just before noon on the East Coast. And I'm making this video because some really interesting things have happened in the last 36 hours. First of all, this is Rob Sim. I'm at CEO Technician on Twitter. That's my handle on Twitter, on CEO.ca, where you can also find me at Goldfinger, and then my YouTube channel, Goldfinger Capital. I just recently changed the name to Goldfinger Capital. Please hit like and subscribe to my channel if you like this video and you appreciate some of the other free content I regularly generate. Um, so let's get right to it. So I have a SPY S&P 500 daily chart here, and frankly, this was like just a couple days ago, one of the most boring, grinding market environments I've ever experienced. So, from very unfavorable, rather dry, narrow range, low volatility, low volume, low liquidity environments to something that's actually kind of interesting now and getting a little bit more exciting. And definitely some money has been made in the last couple of days. So, this SPY chart, first of all, I want to just make the observation this is a classic uptrend, lower right, lower left to upper right. That's the definition of an uptrend. Prices going higher. The moving averages, the key moving averages I have on almost all my charts, the 50 and 200 period, are both sloping upward now, and price is above both of them. So, just simple definition, we have an uptrend here. And if I look where we are today, well, it looks like price is either breaking to new highs or on the verge of making new highs for this move. And then I look at some of the indicators. Well, relative strength is above the median line and pointing up, it's around 60, which honestly, on the daily relative strength, 60 is really a sweet spot. That's a nice level where I like to see a chart just as it's breaking out. So this is a very bullish setup in the SPY. This is not a chart that I want to be trying to short, that I want to be trying to fade. Okay, at least not on this time frame. Obviously, on tactical trades, 5-minute charts, 3-minute charts on the E-mini futures, we can short scalp 5 or 6 points here and there. But on the daily time frame, simply put, as a technical analyst, this is a chart that I want to be looking to get long of. I want to be long of. I don't want to be shorting um, this chart. Okay. In fact, the consolidation that it's made over the last month, where volume and volatility really dried up, yet price kept bouncing back to sell-offs. We had a sell-off here, we had a sell-off here, and we bounced back every time and continued to grind higher. And then yesterday, so I'm zooming in here to the E-mini S&P futures, the 2-hour chart. We can see this diamond pattern took shape over the last couple of weeks. I haven't drawn this perfectly. I'm not going for high marks on my art, but it gets the point across. Consolidation, within a relatively constrained price range that was really constrained by about 4120 on the downside and 4160 on the upside, really a 40 to 50 point range for 2 weeks. That's 1%. For the largest stock index in the world to trade in a 1% range over a 2 week period is pretty unusual. Um, and then that gave way to this breakout that we got yesterday morning. And I want to make the point that this was very instructive. I think the market lulled a lot of people to sleep over the last couple of weeks, and a lot of people weren't convinced that this move was for real. Um, and then look at this bar right here. This is a 35-point bar, 41.44 low, 41.79 high, 35-point bar in a 2-hour period. Um, After this market has basically traded in a 35-point range over the last 2 weeks. So from 2-week range to a 2-hour range, pretty impressive move. And that's just, you don't want to be fighting that. You want to be long of that. You want to play that breakout. That was a very nice trading opportunity. We got long in the trading lab at 41.44. And now, okay, maybe at 4,200, it needs a little breather. This is a big level up here, 4,200 to 4,206. The high from May 1st was 4206.25. So obviously that's a big price reference point. It remains to be seen if we can get above that by tomorrow's close. Generally, I wouldn't be trying to push one's luck here heading into a weekend. And for some people, it'll be a 3-day weekend. In Canada, it's an extended weekend. In the U.S., we get our extended weekend next weekend. So anyway, this is an instructive chart, instructive trade setup. And if I overlay the technicals with sentiment, I can see that the S&P daily sentiment index has been in the 30s this week, and as of yesterday's close, it just got up to 40 for the first time in a while. So that's hardly bullish sentiment. So I have this very nice chart set up with price breaking out, overlaid against bearish or neutral sentiment. This is almost a picture perfect setup. This is not a move we want to be fighting. Okay, simply put, I'm saying that for like the 5th time in this video. We don't want to be fighting stocks here. Debt ceiling or whatever, as a technical analyst, it's telling me I want to be long, not short. However, taking a look around, we can take a look at gold. This is a market that's rolled over here in the last couple of days. It wasn't long ago that gold was well above $2,000 an ounce, and here this morning we're at 1957, breaking under the 50-day moving average, breaking under key support at 1985, maybe puncturing 1960 support level, although I would like to see the weekly close here on gold before I proclaim that that support is lost. But this is an interesting spot here, and there's no easy trade here in gold. So the SPY, the E-mini, much easier setups in my mind than the gold chart right now. Okay, this is something we need to watch, needs to sort of bottom out a bit. I want to look to the euro, USD, the euro dollar for some hints. You can see that gold and the euro have an increasingly positive correlation. They generally have a very positive correlation if we look back. There's big support in the euro at 107. This is a big level, 107. So we're not quite there yet. The GDX just starting to move under the lower Bollinger Band. I wouldn't say it's super oversold yet, but it's getting there. The GDX has big support near the 31 level. So a lot to watch for here today and tomorrow. See if we get down to some of these key levels in the intermarket charts, and maybe a tradable low will line up in gold. But that remains to be seen at this point in time. Have a great weekend. For those in Canada, enjoy your extended weekend. And thank you for your time and attention to this video.